Well, hi, everybody. Welcome to the Buffett and Beyond Research Saturday Stock Market Recap, June 28, 2025. Yeah, it's the last Friday of June. And remember, folks, if you want to walk on this beach like Jimmy Buffett used to do, you've got to learn how to invest even better than Warren Buffett does now. And this week, well, the market had a great week, hitting new highs all week long, and Friday ended with a weakening market as maybe it came too far too fast. And when all is said and done, we're at the same point we were last December and the highs of this past February. So actually, for about 6.5 months, we haven't gone anywhere. And our weekly stock analysis video, well, we take a look at Apple, which has really been the worst performing out of the Mag 7 stocks for the year. And the rate of earnings growth has been slowing down, and we've been watching that for 2 years now. And the question is, will it be in our growth portfolio for next year, or will it be another stock with a higher, faster growing earnings income than does Apple? Yes, I know we've had Apple in our portfolio for a very long time, but maybe it might be replaced. But we won't know for another couple of months. The year is only half over, folks. In our ETF video, well, our top stocks in the NASDAQ, in our NASDAQ 100 portfolio, along with the top stocks in our Sector Star ETF portfolio, both of them are trouncing the S&P 500 for the year. So you've got to see this, folks. Outperform, almost doubling the QQQs, which is the NASDAQ 100 itself, and one of the portfolios actually is. So we'll take a look at that, and we'll see which stocks are doing good and which stocks are hurting the portfolio a little bit, even though these portfolios are the best performing that we've seen around any place. So let's take a look. And let's look at the S&P 500, and we can see, yeah, it is going up, going up, going up, closing above this line up here. And usually when that happens, the market will drop back a little bit after a few days and then climb back. But don't forget, this coming week is a 4-day shortened week heading into a holiday. So this is the 4th of July, yeah, and heading into the holiday, we usually find a good or uptrending market. So this is going to be very interesting because we are at new highs, and you know those new highs are going to be tested. So we'll see what happens this week. It'll be very, very interesting. And we can see this indicator down here. Looks like it's just turning up. Let's take a closer look. And here we are with the candlesticks. And this is the S&P 500, and you can see that it has reached a new high. But you can see we've been back here in February, and in December we were almost at those highs. And then actually in January we tried to reach them again, and then again in February. So here we are now. We're up, and we were up much stronger on Friday morning than at the close on Friday. So we'll see what happens in here. We do have this gap down here, folks, and when we have a gap, well, we just don't like it. And what I mean by we don't like it is because gaps usually get filled sooner or later. And we can see up here by this short-term indicator that we are very overbought, and we'll see what happens. But down here, it looks like, just like on the last chart, it looks like this black line is crossing over this red line, and that would be a buy signal. So we'll see how the market closes. I'm doing this report about an hour before the market close, and then we'll see what happens on Monday and Tuesday, Wednesday and Thursday, because Friday, yeah, is the 4th of July. So it'll be a shortened week, and usually we get a upward bias the week before a long weekend. And the problem that we're looking at here is that even though the market has made a new high from here to here, we're looking at this uptrending line. This indicator is trending down, but we have to wait for it to turn down before we actually get a double top in here. That would be a sell signal. That would be a bearish divergence if this black line turns down. So it has to turn down in order for that divergence to occur. In other words, a higher high in the market, but a lower high in this indicator. And we'll just have to wait and see what happens. But we've had a good run this past week, and look at this rally coming off the bottom in April. So yeah, very, very nice. And portfolio, well, the SPY is sitting at right around 611 right now. So this is a misprint right here. So we're looking at 611, but we have our July, our August, and September puts. This is about $150,000 portfolio, and we need 3 SPY puts to cover that, about 12% below the market. So we'll see what happens this coming week. I hope we don't need this portfolio protection, but it's there in case we need it. It's pretty inexpensive right now, so this is a good time to get into some portfolio protection. And you see, we like to go out 3 months and then roll over. We'll be rollovering the July 18th put sometime next week or the week after. We'll see what the market does, and we want to get a nice price for that October put. So we just have to wait for this week to happen. And folks, as I said, we had a good week. The market ended just a little shy, and it's going to test the previous highs that it made yesterday and the day before, depending which index you're looking at, the QQQs or the S&P 500. And again, with the good week, we put some dollars in our pocket. We had some covered options that are expiring, and so we'll just go out this weekend, have a good time. We'll stay safe, be with our families, because, folks, we'll be right back here in a couple of days.